Hello and welcome to today's A-Team Group webinar on the post-Brexit sanctions regime, how to stay safe and compliant. My name's Sarah Underwood. I'm an editor at A-Team Group and I'll be moderating today's webinar. Our expert speakers today are Susie Ogilvie from Freshfields Bruckhouse Derringer, Gail McGuion from Alliance Global, Richard Dunmore from Sumitomo Mitsui Banking, and Hayden Mannon from SIX. I'll ask them to introduce themselves in just a few minutes. But first, some information about the webinar and how you can take part. To the right of your video, you'll see a panel, and we'll run 3 polls in that panel during the webinar. So please do take part so we can gauge opinion on some of the questions we'll be answering today. There's also a panel for you to ask questions. So if you'd like to put any questions to our experts, please put them there and we'll ask as many as we can during the webinar. We'll do it as we go along so that they don't all get left to last and lost. So thanks for that. And also you'll be able to see on your screen some A-Team group resources that you can download or sign up for. You'll be able to see the Entity Data Management Handbook that includes information on sanctions, and you can sign up for next week's webinar on transactional reporting post-Brexit and our April Data Management Summit virtual, always a popular event. So do feel free to sign up for those or download the handbook. Enough of me, and let's come back to our speakers. So Susie, please introduce yourself.
Hi there, I'm Susie Ogilvie. I am the Global Head of Financial Crime and Sanctions at the international law firm Freshfields Bruckhouse Derringer. I've been at Freshfields for a number of years. I also sit on the Law Society's Money Laundering Task Force, and I am the UK delegate to the CCBE's Money Laundering Committee. So that's the European Lawyers Group.
Excellent. Thank you very much indeed. Over to you, Gail.
Thank you, Sarah. I'm Gail McGuion and work as Global Corporate and Specialty UK since 2019. I have been working in the insurance industry for almost 8 years now, and previously worked at Willis Towers Watson's in the sanctions team, brokers sanctions team. And I am responsible at Alliance for basically a couple of regions, including the UK, Nordics, Russia, and the Mediterranean and Central European Central regions.
Sounds like plenty to be doing. So Richard, over to you.
Hi there, yeah, Richard Dunmore. I'm the Regional Head of Sanctions for Sumitomo Mitsui Banking Corporation for Europe, the Middle East and Africa. I've been with SMBC for just over 8 years, and in addition to my role there, I'm also currently a co-chair of the UK Finance Sanctions Panel.
Thank you very much indeed. And coming to you, Haider, and to tell us a little bit about SIX.
Thank you. My name is Hayden Mannon. I'm a regulatory specialist at SIX. I look after our sanction securities monitoring service here in the United Kingdom. And as part of that, supporting a growing number of our clients, I sit on the TISA Financial Crime Working Group, and I also sit on the TISA Financial Crime Investment Restrictions Subcommittee. A little bit about SIX. We are owned by 122 international financial institutions. We have been around for a very long time, almost 100 years now, but not yet, 90. And this last year, we saw the acquisition of the Spanish Bourse, which led to us being the now the 3rd largest European exchange. We are a member of the ANA Service Bureau, the National Numbering Agency, and we are pursuing and innovating on sustainability, ESG, and alternative data offerings, as recently evidenced by our acquisition of Orenda Software Solutions a couple of weeks ago. And without spending too much more time on SIX, because I will be talking about some of the data elements which are covered by our service, I'll now hand it back over to Sarah.
Thanks very much indeed, Haider, and thank you all. Let's get on with our conversation. And coming to you first, Susie, if I may, please would you explain the scope and requirements of the post-Brexit UK sanctions regime?
So we're a couple months in, and I'm assuming that people have now come across the Sanctions and Money Laundering Act of 2018. So that is essentially the act that introduced the UK's domestic sanctions regime. I'm going to refer to that act as SAMLA. I'm not sure if everybody is using that acronym, but I thought I'd highlight that up front so that everybody knows what I'm talking about when I refer to SAMLA. That's the act. Now, under SAMLA, the government is able to impose sanctions by passing secondary legislation under regulations. And that's for the purposes of complying with UN obligations, other international obligations, or for a series of listed purposes. And they include the usual suspects, as you would expect: prevention of terrorism, national, international security interests, and UK foreign policy objectives. But notably, it also introduced human rights sanctions as well. It essentially, under SAMLA and under the regulations, the UK effectively transposed a lot of the EU sanctions. And they're broadly similar, but we'll come on to later, I suppose, how they differ from the EU sanctions. So in essence, there is a slight difference, and that obviously is the reason for today's conversation, because there's a potential for an increased compliance burden.
Absolutely. Thank you. Haida, would you like to add anything there? You're on mute. That's it. Thanks.
Yes, no, I think as Susie has just mentioned, the autonomous sanctions regime that we are now following is going to be greater in scope than what we were previously dealing with under the EU framework. I'm also kind of appreciative of the fact that this will lead to, but the expansion also in the number and the severity of penalties that are going to be enforced by the UK regulators. So that's something that we're conscious of. And I think where I'll talk about this later is, how does data play a part? I also have a question for Susie on this subject later, which I will put to her.
Okay, fabulous. Okay, well, let's take our first poll, and you'll see that to the side of your video as I described earlier. And the question is, how compliant is your organisation with the UK sanctions regime? Surely these are early days, but let's see. Please place your votes while I come to Richard to talk a little bit at quite a high level about how UK sanctions requirements now compare to those of the EU and US.
Yeah, so I think, as Susie mentioned, we're probably now at the point of least divergence, you would say, in particular between the UK and the European Union. Much of that legislation was transposed. So in terms of regimes and listings, there is very much a broad consistency between those two regimes. And I guess, you know, on the US side, yes, there is much of many country regimes which are broadly aligned with the UK and the US, but as everybody I think understands, the US also has, you know, its own very active autonomous regime, which they've looked to impose in a much more aggressive way than the UK or the EU historically. And I guess the big kind of question going forward is, to what extent does the UK look to a kind of effectively straddle its historic sanctions imposition and relationship with the European Union? But to what extent will it also be able to use its autonomous powers to be able to align itself more broadly with the United States and other like-minded nations such as Canada, where it's unable to get the 27 EU member states to agree on certain restrictions? And I think we're probably seeing an example of that at the moment around the human rights sanctions in relation to China, where there's one or two EU member states who are reportedly blocking those designations. And it'll be interesting to see whether the UK looks to autonomously kind of push on with those and align itself more with its US counterparts rather than those in Europe.
Okay, Susie, what would your view be there?
I suppose I'm sort of looking at a little bit more at the detail, and I would say that there are a lot of similarities, but if you sit in a compliance function, for example, in a sense, having similar regimes that have little minor differences actually provide significant challenges, I would say. And in some respects, and if I look at it and I think about my own position, I find that can actually be, you know, more of a trip hazard than if you have those sort of separate regimes that Richard is mentioning, that you know, and you have that divergence because it's very, very clearly different to you. So I look at it from the compliance perspective and some of the challenges, and see that there are these sort of specific little niggles in the legislation and niggles in the differences, which can potentially cause people problems in trying to apply the different regimes.
Excellent. Thank you very much indeed. And let's have a quick look at the poll results, if we may. Okay, that's looks pretty good to me. About halfway to being compliant, 29% completely compliant, 29% 3/4 of the way to being compliant, and nobody's saying that they're at the very beginning of it all. Oh, yeah, that's right. Excellent. Susie, coming back to you, what would you say about that? And can you tell us a little bit about the actual sort of particular elements of the sanctions in the UK that have changed?
I'm not really surprised with the results of that. We, despite the fact that we were aware of differences, things are always evolving in the sanctions space, and so I think people do, have to spend quite a lot more time in trying to become compliant. And I think, I'm not really surprised that some people are reporting that they're only halfway there, but it is good to see that no one is sort of just in the very, very early stages of planning. That would be a little bit of a surprise. In terms of some of the differences that I was talking about, I think sort of taking a step back and looking at it at high level, there is some good news in that some of the regimes have been amalgamated, and so it's easier to navigate your way around. If you look at EU sanctions, and if you think about Russia, for example, you just had a lot of new regulations coming out, and none of it was really consolidated that well. And so there's the good news in that, that's a great step forward. There's also a new regime that effectively looks at it's called I call it the misappropriation regime, and that sort of encompasses some of the I would say what I call the residual sanctions that were in place, after the Arab Spring, for example. And so you see that amalgamation, which I think makes it easier for people. The list of designated persons is slightly different. That can obviously give rise to certain issues of cross-checking particular regimes. So that's something to watch out for. In fact, 113 people are not on the UK list because they were determined not to actually meet the SAMLA requirements. So it's just worth being alive to those differences. Ownership and control. If you look at the asset freezing measures at UK level and look at ownership and control, there's this assumption that all of the assets that are owned by an individual are caught by asset freezing measures under the EU legislation. In the UK legislation, there's more specific guidance on what happens when you go down a level. So, assets that may be controlled by another company that is ultimately controlled by the designated person, for example. And there's some specific guidance on that point in the actual, legislation now. It does, however, still have an element of judgment in it when you look at the definition, because you actually have to think about, the degree of control that somebody might have. So, you're not away from that. You still have to think carefully about how someone, on the basis of facts, might actually have some control over the underlying entity that you're looking at. There are differences in the licensing regimes, but one of the key areas of focus that might be of interest to people is the differences in the Russia regimes and capital markets, for example, and how it might actually apply, and the trade sanctions. And if you think about the capital markets sanctions and the loan restrictions that are in the EU Russia sanctions, a lot of them have been transposed across, but there were references to EU subsidiaries and non-EU subsidiaries in those restrictions. And now that has been changed in the UK sanctions to non-UK and UK subsidiaries, for example. And what that does is it means that if you are, an organization that is not only operating in the UK, but operating in Europe, you may have differences in application as to how you if you have UK people in your UK offices looking at a particular deal, it might be very different if you also want to bring in people from Europe into that particular deal. So there are challenges around that as well, in terms of how that has been transposed. I don't think it's a particular surprise. The other aspect is, looking specifically at the trade sanctions and financial assistance in that respect. The definition of brokering services is far wider in the UK, and that I think is a key point, because not only do you have to be involved in, negotiation in respect of those trade measures, also facilitation has been brought into the mix. So if you facilitate an arrangement, that might be in breach of those specific trade controls. So for example, the list of prohibited equipment, you actually have to apply for a license, whereas you might not have had to do that under the EU regime. Now, there are general licenses in place, and that's not something that we saw that much of under EU regimes, but you still have to notify that you're actually using that license. And so you have to use the Spire service in order to make that notification within 30 days. So these are some of the key differences. I'm happy to answer any questions on the detail of those.
Okay, thank you very much indeed. Bringing you in here, Gail. You're at a user organization. What elements are you seeing amongst these sort of new things in the UK regime?
Yes, so Susie basically raised the major points, major changes, and I just wanted to bring a bit of perspective as to how an insurance company basically dealt with those changes. So for us, it really meant to check that the UK sanctions listings were properly taken into account by the screening provider, and that the correct, or I should say maybe full information, was properly fed into the various business tools in which our screening tool is embedded, in particular regarding the ownership and control rules. It also meant that the whole sanctions team, as I am based in the UK, but my colleague based in Germany, that the whole team is actually aware of the differences between UK and EU sanctions requirements. But it also meant to carry out an in-depth portfolio review, because obviously it's not just limited to the UK, in order to assess any risk that might fall within the scope of the new UK sanctions. For example, as you can imagine, the UK-Russia regulations were quite important from an insurance perspective, especially in terms of the changes between the differences between the UK and the EU regime. And as Susie mentioned, if one risk did fall within the scope of the regulations, whether we would be in a position to rely on an existing general license and contact OFSI via Spire, and or whether actually the risk needed to be transferred to another team, a non-UK team, without any UK person involved in the chain, because obviously we're talking about underwriters elsewhere, but also their managers. And also it brought into question as to whether we wanted to keep the same risk appetite for certain risks. So, and I think that one of the other points I wanted to just mention is that obviously there aren't that many differences, but those differences the UK regime brought in basically triggered the requirement of new questions in our sanctions process, obviously depending on the country in question, but it meant new questions for the business as well as for our clients and brokers. So obviously this was quite a lot of documentation to create and people to contact.
Okay, that's great, thank you. And as Susie said earlier, it seems relatively small, and a lot was taken from the EU but it creates quite a lot of challenges. And Susie, I have an audience question here that I think you're probably best placed to answer. And it asks, does the UK have a similar clear rule to the OFAC's 50% with respect to implied sanctions for subsidiaries entities that are 50% or greater owned by the sanctioned entity? Or is it more nuanced than that?
Sorry, is it the ownership and control provisions are actually sort of fairly specific, and they actually say that if it's 50% control ownership, it's caught, and then if an entity further down the chain is 100% owned by that 50%, then you will effectively have to be thinking about the sanctions.
Right.
I'm not sure if it's not that there's relatively limited nuance in the 50%. I think the nuance is in it. It's sort of there's a catch-all otherwise controlled. So I think if you think about situations that may have happened when the first rafts of sanctions were put in place in relation to Russia, for example, and there were a number of designated persons, many of those who were subject to asset freezing measures transferred their assets to other people. And you had to do an analysis of whether or not you thought that there was some sort of behind the scenes arrangement. And we do know that some individuals transferred them to family members, which made that analysis particularly difficult, because if you've transferred them to your son, for example, you might be in a situation where you cannot get the comfort that you need, that they don't ultimately retain that control.
Okay, fine. Thank you very much indeed. Let's move on then, and let me come back to you, Haida. Talk a little bit about how SIX sees the impact of these changes on capital markets participants. Gail touched on business, and there are changes there, perhaps for people. How do you see that?
So from our perspective, I think we have already productive cases where the majority of the global regulators are already embedded in our service. So those lists are coming in. So this is an additional list. It's a kind of a BAU process for us, where this framework now has to be incorporated. In fact, it has already been incorporated in our systems. And then the next step from there is about the identification. And Susie has just talked about the ownership criteria. Mm-hmm. There we use a very big data set that covers over 400 million private and publicly listed companies. And we are then able to look at all the direct and indirect structures of ownership, look all the way down the trees, and identify any financial instruments connected to those flagged entities that the regulators are flagging, but then those that are meeting the criteria for that 50% rule. So that's a very complicated process in itself. The addition of the UK sanctions framework now has meant that we are analyzing, or we've had to analyze this from the perspective of the legal aspects of each of the regimes and what the financial sanctions, the language, means in relation to the financial instruments. So in some cases, it's just asset freezes, as Susie will tell you. In other cases, there may be other aspects of financial sanctions that are coming into play, which we would have to then control for. So we are looking at all those aspects. And currently, as it stands, the Russia case was probably the most important one to highlight, is that under the EU exemptions, those subsidiaries of Russian companies, whether they are banks or manufacturing companies or oil and gas companies, still continue to do business in terms of raising capital and issuing financial products within the EU. However, that's not the case anymore for those subsidiaries in the UK. So that has been tilted. So that was the very first thing that our system captured as part of this exercise.
Lovely, thank you, Richard. As a working at a user firm, how do you see the impact on what you can and can't do, or what you are doing?
A couple of points here. So I think Susie's talked about the idea that under the EU Russia regime, there used to be a broad EU carve out around the capital markets restrictions, and under the UK regime, that's now become a UK carve out. So that's created some added complexity. Another thing that I point out with respect to the Russia regime is that historically that was one of the few, well, to my mind, really the only regime where the EU had provided OFAC-style FAQs in relation to that program, and they actually released those in 2 separate sets. Under the UK regime, they've done away with that FAQ model, which I can certainly say, I think from a banking perspective, is the preferred one in terms of giving clarity and certainty. So now we've got a much more generic document, and an exercise that we actually undertook within UK Finance in the run-up to the end of the transition period was effectively to take the EU Russia regulations and the European Commission Russia guidance, the FAQs that went with those regulations, and compared it to SAMLA, the primary piece of legislation that Susie referred to, the Russia statutory instrument, so the secondary legislation, and the Russia guidance that was published by OFSI. And we've actually identified a number of gaps where previously the European Commission provided clarity on certain points around the Russia capital markets restrictions that we think are still missing from the UK regime. Now, it's not clear yet as to whether or not that means that OFSI are taking a different interpretive view, or whether it's just something that slipped through the cracks. But I definitely certainly say if you're active in that space as a UK entity or a UK person, or even you have a UK nexus to your business, that's something to be certainly quite forensic about how you make sure that you've covered all bases on that analysis. I guess the one other point I mentioned, going back to Heider's talking around the ownership and control aspect, is as the UK looks to push forward further with its human rights regime and potentially also then branching out into the anti-corruption regime, are we going to start seeing more high-profile individuals with bigger kind of commercial assets within their realm, becoming subject to sanctions and making this due diligence type process all the more important for market participants? Certainly, I think there's reason to kind of horizon scan ahead that things could become more complex in the future.
Okay, thank you. And staying with you, Richard, I have an audience question, which you may be able to help us with. It asks, has the UK regulator started to issue fines for breaches of the UK sanctions regulation? And if not, when do you see these coming in, and what sort of sums of money are we talking about? I think the answer is big on the last bit, but are fines being issued yet?
So since January or 31st of December last year, we haven't seen any new enforcement actions coming out of OFSI. Certainly timely to the question, though, OFSI have in the last couple of days updated their guidance around how they go about imposing civil monetary penalties. So that's certainly something to dip into. And from what I've seen so far, the changes are fairly limited compared to the original document. And certainly from OFSI's point of view, though, they say that they receive, a decent volume of breach reports. The reporting requirements are quite severe. And the landmark case, certainly from a banking perspective, was that of Standard Chartered. And something that I found quite interesting about the Standard Chartered case was that it's effectively like a Russian sectoral sanctions type penalty. And we actually haven't seen even OFAC come out with a sizable penalty in relation to those debt and capital markets restrictions yet. So I don't know whether that's an indicator that in some elements OFSI maybe kind of doesn't have that big backlog that OFAC have. You still see penalties imposed by OFAC, which relates to activity 5 or 10 years ago. So very much watch this space. Politically, I think it's quite clear that OFSI would probably feel under pressure somewhat to land some more kind of large enforcement cases. So certainly, again, one to keep an eye on, and also to review, make sure that those when they're announced, that they're reviewed, and that people are learning the lessons from failures that have been identified.
Okay, thank you very much. The fines can be ghastly and the reputational damage can be huge. So as Richard says, it's something to keep a very close eye on. And coming back to you, Gail, we've talked a little bit about things like OFAC, we've talked about the EU. What regimes are important to firms that are affected by the UK sanctions? It's as you've already said, it's getting more complex.
Yes, thank you. Yes, as you mentioned OFAC, and yeah, the US sanctions regime is definitely top of the list for AGCS. There is not a single risk that we analyze without taking into account US sanctions, whether it's because of the volume of enforcement actions taken by the US regulator, the size of their fines, unlike views of OFSI, and also due to the extraterritorial nature of the US sanctions. So our own risk appetite and that of banking partners is definitely affected by US sanctions regime. And basically we follow any guidance that may be issued also by the US State Department or the US regulator. Apart from that, though, we do have the EU sanctions regime that we follow obviously quite closely due to the ownership structure of AGCS, but also, and more specifically, German sanctions, including the anti-blocking legislation that we have. Sorry, there seems to be some echo, so I don't know if you have an issue on hearing double.
Okay, I think we can hear you, Gail.
Okay, good.
Yeah.
Yes. So basically, German sanctions regime are also very much analysed due to the anti-blocking legislation that is in place, and which obviously prevents some of our underwriters from taking on any risks that concern basically Iran and Cuba, which we have yet to see whether the UK will follow the same line. So something to keep in mind.
Okay, Susie, would you like to add there to this great mix?
I think it's, I mean, just the addition of one additional sort of sanctions regime, throws a whole host of additional questions in. You don't just sort of think about, if you're based in the UK, you have to think about perhaps your customers, the nationality of the people that work for you, location of others, and if you are, not just UK based, you'll have to think about your structure, where's your, top company, your parent entity based, etc., and how does that impact the sanctions in relation to, the EU. Obviously, you have that US nexus. If you have, US nexus, you have to consider the commercial implications of the blocking laws, as well as the extraterritorial legislation, and that's always a significant challenge, because on the one hand you have, US extraterritorial sanctions, and on the other hand you've got a regulation that says, well, you mustn't comply with those sanctions. And often that comes down to a commercial decision that might be based on availability of insurance or availability of payment mechanisms, etc. Rather than it being a case of choosing one regime over the other, it's sort of about your commercial decision making and where your businesses lie and where your customers are, and all of those external influences. But if you are just a UK company, you can't just say, okay, well now I'm only worried about the UK regime, because there's lots of different factors in there.
Okay, that's great. Thank you very much indeed. And Richard, coming back to you, there are a lot of factors in there, as Susie mentions. How would a company like yours sort of approach compliance on both a local and global basis?
So I think, just continuing what Susie's just said, it's becoming increasingly complicated. And I think this is going to be a big challenge, especially for global companies going forward, because the trend kind of over the last 10 years, as we've seen sanctions become more complicated, and we've seen the scale of enforcement, is that I think especially kind of large international companies have very much looked to consolidate, a common policy, a common risk appetite, centralized functions to try to remove those layers of complexity by just saying, okay, we as a firm will adopt this position on all of our operations around the world. And then 10 years ago, that felt like a perfectly sensible approach and way to go about things. And as Susie's just talked about, now we've got divergence in terms of regimes. We've got an increased number of jurisdictions looking to introduce their own sanctions programs in markets which large global companies want to have a presence in and want to operate in. We've got increased numbers of blocking statutes and those types of mechanisms again. And I think that appears very much to be a trend, that other jurisdictions are now looking to kind of challenge US supremacy in this space. And even the European Commission have released a paper at the start of this year kind of talking about how they're going to look to try to, one, kind of reduce the impact of extraterritorial sanctions out of the US, and also make the EU regime, how can they implement it more effectively, and how can they enforce it more effectively? So it looks to me like divergence is very much kind of on the way. The challenge there is, okay, how do we unwind these global policies and risk appetites and positions that we have to take into account these nuances that Susie talks about in terms of, you know, small differences, but that can have a material impact upon the way you handle transactions from an EU-UK perspective? How do I make sure that my local employees in a certain office aren't in breach of local kind of blocking statutes, etc.? How do I recuse? You know, the concept of recusing US persons has been around for a long time. Suddenly, we're all talking about what does the UK nexus mean? You know, so it's going to become more and more complicated, especially for those companies that have got a footprint in different jurisdictions where we're seeing this type of divergence, and it's really going to come down to each institution to work out from a regulatory point of view, what do I need, what am I required to comply with, and then after that, how can I, as consistently as possible, adopt a common risk appetite across my business, because that's been our kind of trajectory for a long time now.
Okay, thank you. Haider, what would you like to add there?
Yes, I think it is a very complex task in terms of decoding all the regulatory, you know, kind of setups. And I say this because, you know, we currently deal with about 10 regulators in terms of the mainstream regulators that the capital markets businesses are concerned with. We're just about to add Japan as another regulator, for example, onto our service. And what this means is that for each regulator, there are very specific rules and logic, as well as legal interpretations, that have to be applied in order for us to come to that final product, which is the identified, flagged, sanctioned instrument. So we have to go through quite a lot of process there in terms of doing that. But then, as Richard, you know, kind of just said in opening when he was remarking earlier, each regulator has a very specific, almost you need to develop almost an expert view of each regulator. So if you look at an investment bank, you know, most investment banks, the larger ones, will have a dedicated person for OFAC, a dedicated person for EU, because not only are they qualified in the law of that particular, you know, sanctions regulator, but they're also qualified in the application of that law to the business and wherever that business may be conducted for that particular institution. And then, you know, as it is, those institutions will have trading functions distributed all around the globe. So what does it mean if you're trading in Singapore versus Hong Kong versus Canada or versus New York? All very different scenarios. And then Susie mentioned earlier, who are your clients? On behalf of whom you're doing that business or that trade? You know, are they retail investors? Are they professional investors? There may be other scenarios where the asset owners may have given you specific mandates of where you cannot trade or what you cannot trade on their behalf. So all those things have to be then looked at within, you know, with the lens of the sanctions, and it cannot be one size fits all. So that is a very complex process.
Okay, thank you. Susie, can I come back to something I think you were talking about earlier? Well, you were talking about earlier, but it's a question from our audience, and it asks, please explain how to resolve the problem when a company must comply with multiple jurisdictional sanctions, but the sanctions are conflicted. I think you touched on those from a commercial basis. Can you just answer that as a single question?
I mean, I suppose it's not that easy. I think if you want to sort of if you want a very simple answer, is you have to determine where your greatest commercial interests lie. And that may be a situation if you have US extraterritorial laws and you have a significant amount of business in the UK, in the US that you don't want to lose, you might determine that you're going to decline to do a particular transaction as a result of that. But you know, I would be very careful in how you phrase that in your record keeping to make sure that it is a commercial decision as opposed to being based on the actual sanctions existing. But conversely, you may decide that, you know, your business in the US is not significant and therefore you wish to rely on some blocking measures. It it is possibly one of the most challenging things, because there's no right answer from a legal perspective. It's often, what is the best thing to do for you commercially, and there will always be a residual risk in there.
Thank you very much indeed. It's getting more complicated by the minute, but let's take another poll. And this one asks, what are the challenges of the UK sanctions regime at your organisation? And this time you can tick as many boxes as you like. And while you do that, let me ask Haida to talk about some of the data sourcing and management challenges of the UK sanctions regime and the types of technology solutions and services that are useful here. So I think, Haida, if you'd like to talk to this slide and explain how things work at SIX.
Yes, sure. So I guess from this is quite apparent that you have the regulatory sources as one input. So these are all the regulators' lists. They can change without notice. In other words, those lists are changing in an ad hoc manner. What we're taking from the regulators is all the lists in all their various formats and with all the different types of taxonomies that those lists are created in, and we're normalizing all of that. So that's one single view that we are creating out of all of those lists. And then we take information from some of our partners' data sets, these many hundreds of millions of private companies and publicly listed companies, and we are able to then run those trees that I spoke about earlier, where we are identifying via the 50% rule the flagged entities against the universe of active and inactive instruments. And this can be a process that's run over 35 million financial instruments. And then just to give you an example of the complexity that underlies this process, so even after you've run that process, there could still be subjectivities that have to be controlled for post-process. So for example, European Court of Justice ruling in 2018 made it so that American depository receipt, for example, which is currently not sanctioned under, say, OFAC, if there's a structured product that becomes issued with that ADR as an underlying, that structured product is actually sanctioned. So you can see that the underlying is not sanctioned, but the actual structured product that has been created is sanctioned. And that can create a lot of complexity in the process when you have to look at about 1.5 million structured products, and we do that twice a day. So when we run that process, we do it twice a day. And any subtle changes to those rules are taken into account, and then we are able to apply those straight away. But I think one of the most important features of our service, at least from what I can say, if I was on the receiving end of the service, which is if I was in the bank or if I was in an asset management firm, is that there's a clear legal rationale that accompanies the reason for why every single instrument that is included or every single entity that is included in the file is there, and is evidenced by not just the underlying legislation that connects back to it, but also for why it was identified, what kind of control features were used to be able to identify that.
Okay, lovely. Can we see the second slide, which I think, is that what this one is telling us?
Yeah, so this goes back to everything that all of us have been discussing, in the last 30, 35 minutes. And here you can see the matrix of regulators on top. So you have Australia, Canada, so forth in that red box. And then coming down vertically, you have all the regimes. And in these regimes, you can see the commonality. And this is just for illustrative purposes, but you can see that some regimes are commonly covered by, the majority of the regulators, and some are sparsely covered by only a few regulators. Now, deciphering and decoding this, because each regulator then has a specific prescription for how they'll deal with any one of these, and you have to go back and look at the documentation. You have to be very familiar with that, and then you have to also monitor any changes connected to that regime. UN, for example, there's a separate committee for every one of these regimes, where you have to then look at the output from those committees on a regular basis to see that nothing has changed that could materially impact the process that we are carrying out in terms of the identification of instruments.
Thank you very much indeed. And coming over to you, Richard, from your perspective, what kind of solutions and services do you find useful here? No names, but what kinds of things are helpful to you?
Well, I think the thing that Haida's already illustrated, right, is the challenge is actually the sheer volume of data that is out there. And working out, again, from your own policy, your risk appetite, your risk assessment, okay, what data is most pertinent to my business, because certainly I think it's fair to say market best practice has moved on a long way beyond what the stricter regulatory requirements are, and we've seen that since really Russia 2014. And the challenge that we have, though, is obviously like the more data you put into your screening software, the more false positives you get, the more likely your software is to break, the more human resources you need. There's big challenges still in the real-time sanction screening space around artificial intelligence. So I think the big thing from a banking point of view now is that probably, again, kind of 10 years ago, you probably had your screening provider who gave you your filter, and you had your list data provider, and you kind of just got on with it. And I think now it's much more important from the client side to really look to have a real partnership with your vendors. In particular, kind of like how can you configure your filter? What type of AI or other smart technology are they looking to develop to help you get down your false positives so that you can really allocate your resource to those highest risk cases? But also, as Haider has demonstrated very clearly, like in terms of list providers now, and people that are providing data that goes into screening, it's like an endless kind of myriad of data points, and really understanding, it's really important to understand who you're working with, what they're providing, how they go about that process, so that if one day you end up having a conversation with your regulator, it's no good saying, oh, my list provider gave it to you. You'll have to demonstrate effectively how you got comfortable, how you conducted assurance testing, etc. So it's becoming a really specialized area, and many kind of large financial institutions and other companies now have really dedicated technological experts who basically do screening and kind of data analytics for a permanent living as part of a sanctions compliance program going forward. And I think that will continue to be a growth area.
Okay, thank you very much indeed. And let's look at the poll results, if we may, on challenges. And it seems sourcing required data is pretty tough. Well, they're pretty fairly equal. Managing data collectively and separately for different regimes, ensuring full understanding of the UK regime, implementing changes to designation licenses and blocking regimes. Nobody's saying that at the moment, but perhaps those are rather early days, and also to settlement. So Gail, coming to you, does that look about right to you in terms of challenges? And can you tell us a little bit about how settlement and custody are affected by the new regime?
Thank you very much, Sarah. Yes, it sounds about right. At this point in time, there might not be too many changes brought to the custody or settlements systems. At least Haider will be able to talk about that as well. But from our perspective, the main issue is probably, as Richard and Susie mentioned, screening, really, to ensure that any tool that uses a screening provider, screening tool, is accurate, includes all the different ownerships, all the different listings, all the regimes that the UK sanctions have so far, and that obviously any updates, any amendment is actually properly reflected, and it's not just for the UK, it's across board, and also across entities, because we're talking about for GCS, but also Allianz. So we are effectively in the need to ensure that all aboard the same results are obtained, to ensure a smooth harmonization of the processes. For custody and settlement systems, so far I don't foresee any changes, especially because the majority of firms would probably have already a specific process in place that relies that it has been set up in light of US sanctions. So I think out of caution, most companies for now can follow the same process for UK actually sanctions, but then that's up to each firm's interpretation of UK sanctions and how they are actually affected by this. So yes, that's how I would
approach that. Okay, lovely. Haider, would you add anything there to what Gail has said?
No, Gail has summarized it perfectly. I think one other point I'll make is that, historically, the most money that has been thrown for compliance has been on the trading side of the business, right? There's no doubt about that. When it comes to the back office, they're the poor cousins, and compliance gets neglected in the process as well. So I think that's changing. The attitudes are changing now. Culture is changing within firms. As we mentioned before, Susie's mentioned it, Richard has mentioned it. This is going to be more intense and enforcement action coming from the UK regulator. At least that's what we perceive, right? And then that is a natural condition that changes the behavior of the market participants. So we do expect to see them behaving more responsibly. But at the same time, it's about making the right investment. So you cannot just say that, okay, because the trading function is the most important, it generates most of my profit, that's where I'm going to put the bulk of my compliance effort. And this is where historically the newest technology finds its place. And then from there, if you're thinking that you have controlled the process at the pre-trade level, that whatever is flowing through the rest of the system is perfectly okay. And that's why custody and settlement and the rest of it may not come into focus. But there are things that find their way through the system, because there are firms who will not control for things properly. They'll adopt a minimum viable compliance attitude, and unfortunately, what that means is they'll take a data system, or they'll take a process, and they'll just, for the sake of ticking a box on a policy sheet, say that this is done. What that means is that something has flowed through the system, and it may be custodied at one of the big custodians without them knowing that there's a potentially tainted instrument within their system. Now, it may not be their fault, but they will be held to account for it because they let it come through. So these are all the kind of things that could happen. So it is recommended that every participant not only gets their own advice, but prepares their risk assessment in accordance with the risk appetite that their business has. And yeah, I think with following that approach, it may make life easier for everyone.
Okay, let's run a quick and final poll. This one asks you, what benefits beyond compliance does your organization gain or expect to gain from successful sanctions operations? So whilst you place your votes, let me ask Susie, how do you see the benefits of this? Obviously, it's complex, it's difficult to achieve. Is there something on the other side that we should look forward to?
Yeah, I mean, I think, if you can master this, you can probably master anything. I mean, it is such a challenging area. There are so many different sort of facets to it, and it's not, we've discussed, it's not just about UK compliance, it's about all the other regimes, data, filtering out data that might not be relevant to you, as Richard says, and also against that backdrop, everything is changing constantly in response to what's going on in the world. And so if you can get something that works here, I mean, you've got a blueprint for pretty much anything going forward. But the other aspect is Haider started talking about risk appetite, and I think there's a more general point. And the more you look at sanctions, the more you start to have this awareness of what is going on, outside of your world, in essence, and that just being aware of what's happening politically and what might happen in the future, and how the big players might respond to that, informs risk generally, and it helps people to make decisions about their risk appetite on an ongoing basis, and it feeds your knowledge and feeds your understanding. And I think ultimately, I think we're all trying to sort of keep on top of where do our risk appetites lie, what sort of reputational risk are we comfortable with, etc. And I think that just having this focus on this particular area really helps you start to formulate a bit of a worldview about what you are and aren't prepared to do. So I mean, that's just my view of things, and I suppose that it may have an impact on people looking at ESG considerations in future as well, because that will start to come into focus, and people will start to think, okay, well, I understand the political direction here in this particular nation, and that's how it might feed my ESG sort of focus. So I just sort of see that there are linkages. They're not necessarily direct, but there are advantages to getting this right.
All right, thank you. Richard, what would you say there in terms of benefits other than having to get a bigger team?
Yeah, no, I think just extending Susie's point, I think really reputational risk in particular is that if you think about the types of things that at least traditionally sanctions have been imposed for, even if sanctions were not in place, they're the types of things that large entities don't want to be involved in. And I think, we're certainly living in a time and space now where, this isn't stuff that just ends up on page 10 of the Financial Times anymore, right? Like with social media, everything is out there. People don't really care about the detail. They're not going to go in and read about, 20, how many violations it was, how inadvertent it was, anything else. They're just going to see bad, bad bank or bad insurance company or whatever. And I think, living in this day and age, certainly from a financial institution's perspective, you still don't really feel like banks have recovered kind of within moral society since 2008. And I think, to Susie's point, I think, it's just it's another element of issues that wider society are concerned with, and that I think corporate entities are becoming more and more aware of their own kind of roles and responsibilities in that, and the benefits that, if you behave well, if you act well, if you're a good corporate citizen, that there are long-term benefits to be made there.
Excellent. Thank you very much indeed. Let's have a look at those poll results and see what people are thinking. Potential for improved risk management. Yeah, sure. Reduced exposure to financial penalties. And yeah, reputational damage. No gains beyond compliance, 25%. Okay. Nobody voting for a better understanding of clients or opportunities to identify and address new clients or markets. So pretty much, I think, what everybody was saying there in terms of risk management and indeed not getting into too much trouble. So let's get to our final agenda item today, and let me ask our speakers what advice they'd give to practitioners implementing the UK sanctions regime. So let's have a quick sum up if we can. And Haider, please, would you kick off?
So my advice would be, to protect yourself reputationally, as we've just spoken about. Get the right data, get the right tools, get the right systems, and the responsible people to do that, internally. Because the biggest mistake that a firm can make in today's operating environment is, with the availability of the technology and the data, is to not implement it correctly. So I think that is the first step in addressing the obligation for meeting that regulatory requirement. And then the second step is actually putting into practice that on a day-to-day basis. So that's my recommendation.
Okay, you make it sound easy. Richard, what would you say?
I'll try and make this very practical. So for UK companies that have overseas operations, I think you need to certainly map out from your overseas operations where your UK touch points and where your UK nexus exists. I think you need to understand very clearly, in terms of your own business and your commercial activities, which UK regimes you are potentially exposed to, and then to quite forensically understand where those nuances lie, in particular between the European Union and the UK, and make sure where there are those gaps and nuances that you really proceduralize your control framework in order to make sure that you're capturing those small divergences between those two regimes, and make sure that that's really embedded within your first line control framework.
Lovely. Gail, a few words from you.
Thank you. Well, I'm only going to talk about common sense, really, as Haider and Richard have already set out quite clear advice. But really, the preliminary step would be to clearly redefine, confirm the company's risk appetite in light of the new sanctions at local and group level. Then to document everything, whether it's a change of data, of tool, the risk review, a portfolio review, any implementation of a new requirement or a new control in the sanctions process. Also, in terms of communication, it is, as always, good to reach out to counterparts, market counterparts, for insight on their own position on the matter. That is something that is easily done in the insurance market, but I believe that most industries have similar communication channels. And then just a standard internal training on the UK sanctions and communications of UK sanctions developments, properly communicated to team and business.
Thank you. Susie, we're coming up to time. A few words from you.
Thank you. Richard has mentioned all of the differences and getting on top of it, and it can be quite daunting looking at a whole host of new legislation, and then trying to work out the differences. And one of the key things is that practically all of the lawyers in the city firms have poured all over this and have produced nice little neat briefings telling you where the differences are. So if you are somebody who is faced with this as a challenge and a task, then I would perhaps suggest that you go online and look for some of the work that has already been done, because it is a particularly daunting task to go through all of that.
Lovely. Thank you. And thank you to all our speakers for sharing their expertise and experience with us today. And thank you also to SIX for sponsoring today's webinar. It's been an interesting conversation, a difficult conversation, but I think we've covered a lot of ground. And just a quick reminder before we wrap up that you can download ATM Group's Entity Data Management Handbook from your screen if you should like to, and register for next week's webinar on transaction reporting post-Brexit, and for our next Data Management Summit virtual. That's it for today. So thank you again to Susie, Gail, Richard and Haider, and thank you to all of you who have watched the webinar. Please complete our webinar feedback form, as we're always keen to hear your views and improve our webinars wherever we can. So meantime, thanks again and goodbye.